Welcome to Definitive. This is Chris Crystal. Thank you very much for coming. And these are my thoughts on the market. They are both the long term and the short term. So, the strategic, or the short term catalyst, momentum, movements, and trends that I think will be developing within the market or that have already developed. And this is not to be considered investment advice for how you should structure your portfolio, nor is it a way for you to figure out your investment need, and it is not endorsed or governed by any of the financial bodies. So please use this information as different ways to think about the market and what you could look at, and I want to wish you the best of luck. Thank you. Bye. So the last couple of weeks have been a lot of fun. We've had a lot of new news into the market where things have been coming and going very quickly. We've had the jobless report in the US, which disappointed at 559,000, and you had a strong sector within the hotel and service, and that was a good thing, but it also gave you a gauge of understanding how the US market was reopening and what was developing. And then you had comments by Janet Yellen meeting with the G7 discussing the way to have a global corporate tax of 15%, which would be equivalent to what China is charging for technology or software. And so we look more towards a global tax rate that would be in effect enforced. And this is a way to prevent companies from moving so much or moving their assets overseas and gaining tax benefits or not. And it would also be a large tech tax. And this is also back on the heels of what's happening in data management and rules or laws coming out of China regarding technology and how it will be tracked. So we also had Joe Biden coming over to Europe for his first European tour. He meets with the G7. There's a lot of discussion and a movement forward about building back better, which is in line with the Biden campaign slogan that he had, Build Back Better. Oddly enough, Europe is using the same. And we have a lot of green standards or policies coming forward and restatement of initiatives then how to meet the goals of 2050 and other goals in there like 2030, and to come to a zero carbon emission. And this is really very interesting because the goals to meet this for the carbon emission standards will be very, very difficult to meet at the current levels. You do see Europe increasing on the wind power and the solar power, and they're adding to the fields. They're sourcing more of this, or they have been sourcing this primarily from China. China is the provider for 80% of the world's solar panels. They're also providing the manufacture on the windmills. And the windmills and the solar panels would be used as supplemental sources to a power grid. Now, this means that the power grid has to be redone and it has to be refitted to handle hydrogen needs, to handle natural gas, and natural gas will be eventually phased out is the idea, and to handle potentially the strongest contender right now is hydrogen. Now, nuclear, of course, provides a good, strong source, and environmentally has been one of the best sources in terms of the carbon gas emission. The key on the nuclear is the pollution from the used fuel rods. And there you could look at a country like Finland and what they're doing in their development of a very large reactor and latest reactor, and how they plan on storing the spent rods and what they will be doing. China, of course, recently had a spill, and this was notified through Framatome, the French company, which is formerly Areva, and we'll see how the contamination spill and cleanup goes there, what news is released. But nuclear is clearly the strongest contender for a reliable, dependable source and a constant baseline for your power needs. Now, as hydrogen would be developed and used for housing, this is again an issue that has to be handled, but it requires re-engineering and refitting of many of the grids and what they'll be doing. So the windmills and the solar panels would be supplemental, where they would provide a fuel source to the hydrogen when the strong demand is not there, and potentially for batteries. Now, Japan is switching over to hydrogen and has been doing so for some time after Fukushima when they shut down their nuclear. Japan is a great example to use because they import 90% of their power, or let's say petroleum and energy needs. They're importing it and they're switching over to hydrogen now. So this is both coal and petroleum that they're using. And when they're making the hydrogen, they're using an ammonium nitrate solution, which is a little gray, so to speak, because when you're producing the hydrogen as a result of coal, it's gray, or what many call greenwashing, as opposed to, say, blue. And this is a continued problem, and this is something Europe will have to overcome. Now, if you look at the solar panels and you look at the wind panels and China's producing, China is very effectively selling these products into Europe, and so they're drawing in the foreign currency. They're continuing their trade, and this is clearly evidenced in the amount of investment into China from Europe, which is far larger than the United States right now. And Europe is the largest trading partner with China currently, or not the largest, but larger than US. I believe Indonesia has the largest trader with China record or title. And now, what happens here with the hydrogen versus the nuclear, they're both some distance away within, say, 8 years, and 2030 is a target for many to have it online. And the ability to achieve this looks still very far away. Now, hydrogen would make an excellent power source for, say, ships, and that's where Japan is excelling. Airplanes are potential, but the question is, how do you get this payload in the air, and how do you use it to fly the plane, as opposed to, do you have batteries, which are at this point not a feasible solution. And what you will have, although you do have contenders within that space, building out airplanes and air transportation for it, the shipping would look easier because you have to re-rig the ships. Structurally, you can do this, and then you could create floating hydrogen stations at sea, very similar to how you have oil rigs floating at sea. You'd be able to use these to have fueling points for these ships, these massive ships that would be transporting. Because currently, 14 of the largest tankers pollute or emit more than, say, all the world's cars. And to do this will take some time, but Japan has been working on this. But if you switch over now to the economics of how things are working, and you look at what's happening with China with their trade in Africa, and how they've been doing financing deals there. If you look at what they're doing in Djibouti, if you look at what they're doing in Iran or with Iran, and if you look at what they're doing in Pakistan, this is a very clear and so far successful, or burgeoning to be a successful strategy for their energy supply. China continues to build nuclear plants, they continue to build coal plants. I believe it's 187 coming this year, and I think it was 43 on the nuclear. India is also doing the same. So both of these countries that have been known as emerging countries and are really very similar to, say, the United States and Europe, where they're developed and undeveloped in certain areas, are building out on a reliable power source, while China is selling into Europe an unreliable power source that Europe will then use to power for the necessary needs of what would be required for a reliable power source on your grid. And so if you take that step with Japan or with China, and you have that, then you look at the next step that they're doing, which is hand in hand with its building back better and green emissions. If you eliminate the petroleum, or the strong reliance upon the petroleum, you start to devalue or take away the need for the US dollar as a global currency. China is launching their digital yuan, or has launched their digital yuan, and with each yuan digitally, they will retire a paper. And this will lead to the underlying trade, instead of settling in dollars, which is how everybody's doing it, will go over to potentially a digital yuan. And so if you refer back to, say, Indonesia as a trading partner with China, where their underlying is trading eventually in dollars, you would see a transition to the Chinese DCBC. And although their digital yuan is working on a digital ledger system, and blockchain is a digital ledger system, remember, China has outlawed the cryptocurrencies. It has outlawed Bitcoin, and they've enacted new laws this past week talking about sanctions and how to work within the sanctions. And if you recall, China is using the term their own Chinese democracy. And so Europe is doing very little to counter this and is working hand in hand in many ways, you could argue, with them on this. And now the United States is working with Europe together with this current administration of the Biden-Harris to move forward and to, quote unquote, be a challenge to China. But I think really what you see, especially when you look at, say, North Korea and how they had been the kind of the, not the guard dog, but the attack dog for China to kind of unsettle things. And now you see Putin doing the same thing. Biden and Putin have recently met, but you have the alleged cyber attacks in the US, which have also been crippling the economic system and where corporations are paying ransomware. You see a very, very well-defined strategy. And then if you go back to the power source for China and what they're doing in the Gulf, or specifically in the Persian Gulf, and you see with Iran, 25-year deal for $400 billion, you see a pipeline being built through Pakistan. China is very aggressively addressing its energy needs and concerns, and they will use a string of pearls to help insulate them on this side. Now, India, of course, becomes an issue, and people say, well, India's got more aircraft carriers than China, so you could see a war, and China may take over or reabsorb Taiwan into China, which will probably happen. China has a stated goal for this, so it's not really a question. It's really just a matter of time. And what you see is China is beefing up, but I don't think you'll have a war, because really we're already at war through economics. And if you look at the Africa trade for the raw goods and the raw materials, which fuels China's steel production and consumption, and China is the largest steel producer in the world, this is being very clearly laid out. And China is really building their infrastructure. They've been doing so. By 2014, they had already used more concrete than the United States had used in 100 years, and they continue to build out very effectively. And China has made some very, very strong moves where, yes, they're not the largest economy in the world yet. They are aggressively working towards that, and they are definitely playing by the new rules that they are setting. So ways to look at this, obviously some of the airplane companies here in Europe and their goals on hydrogen, looking at the power companies, which are, some of them are state-owned, but are publicly traded. You have a few of those. If you're looking at the wind and solar, you're clearly seeing an expansion and a lot of momentum money trends into them. How they will play out over a 10-year or a 15-year, I would think that maybe the value will be in the land and the real estate there. If you look at the hydrogen, hydrogen is primarily a private equity investment at present. Fuel cells are a great idea, but like Elon Musk says, it's a stupid idea for cars at the present, and that's because of the fuel cell, what you need in terms of efficiency improvements for the power generation and the battery loads is not yet there. So, and also as China continues to build out these ports, these pipelines, pipeline companies become very effective. Look at Nord Sea, you see what's happening with Germany and Russia. And then you also look at what the crane companies, the ship-port crane companies will be doing, especially in regions where you have a lot of ports. Shipbuilders, of course, receiving new orders because of the current backlog. So this brings us to the question of inflation. And with inflation, we know as a consumer it's been here for some time. The Fed made comments that they may raise rates in 2023. This is in line with the EU forecast for how they expect the economy to develop, and that you will have a return to normal by 2022. The inflation spike was expected, and many are saying inflation is here, it's killing the economy, but then you look at one of the key points that everybody was pointing out, and that's lumber pricing. Lumber pricing has already had a quick drop despite the need for 5 million new homes in the United States. So the market continues. There's always a way to make money, and I would want to wish you the best of luck, and I'll be back to you very soon. Thank you.